Alright y'all, quick video on GBPJPY. When you look at this, it's pretty simple if you understand what's going on, and you could pretty much have predicted this was going to happen based on what was taking place, right? So like I always say, when it comes to trading in the charts, you want to focus on clarity. Clarity is the most important thing. This is why I don't use indicators, because I like to see exactly what's going on the chart. I like to understand the flow of it, and a lot of times, even when I have markings on the chart, I like to delete them because they too much clutter what I'm seeing. I focus on clarity. If you focus on clarity, trading is easy. The only thing that complicates trading is when you clutter and when you confuse yourself. You already know how to trade. You know what's going on. It's up to you to simplify the actual process. So when we look at this is a nice easy setup and a nice beautiful setup on a higher time frame. Higher time frames are more golden than lower time frames, especially when it comes to like nowadays with how the market is going. Higher time frames are pretty much more golden. You'll catch some solid trades if you understand what to look for. So starting out over here, you see how this was pushed up. This was a nice little manipulation setup, a push up only to come down. So that was only to get people to buy. And once that took place, it came down, took out the orders. And now as you see, the retracement, the higher high was never broken. So now that's market structure. So now we put market structure with institutional order flow. So now we have confluence being stacked. So as it's coming down, it's leaving behind a lot of gaps, right? It's leaving behind gaps. And when it's doing that, that's pretty much an indication that eventually, the market running that fast, eventually it'll have to retrace back into it, because the nature of the market is to pair orders. So as it's tanking, like you could have taken this whole trade, as you see right here, just by the indication of market structure alone. You have the low being broken, or you could take it up here, the fail of the high on the lower time frame. Nice beautiful reversal setup, or you could use the fib to get a nice confirmation, 61.8. And notice how it ran up straight into the order block, into the gap, and it came right back down. And so while it came down, even if you miss this point, you could have gotten this point, and then seeing that retracement, the high not breaking the previous high, you could have gotten here. Or if you missed that, you could have had a sell stop somewhere below the 23.6, because 23.6 usually work as a speed bump when it comes to Fibonacci. It likes to play around this zone, but without the Fibonacci, the market structure is clear. The lows were broken, neckline broken, and it pretty much tanked from there. So now it only tanked to pair previous orders. So now as it's pairing orders, if we go back to the higher time frame, it's coming down. A high was created here. Now understand, based on institutional order flow and how order flow works and how retail traders pretty much work, what tends to happen, what will happen is this. Where is it? Orders are being placed here for sells, just like an orders were placed here for sells, with stop losses up there, stop losses up here, stop loss, stop loss, stop loss, boom, right? So now as it's going down, and it's going down, and people are making money, it's going down, right? So now those individuals who took buys down here, they have their stop losses, because their mindset is it's going to keep going up. They have their stop losses sitting down there. And what took place pretty much is a manipulation. Came down, took the stops, liquidated the orders that was sitting here. Most likely this ran into an order block. because I know how this works. Ran right into an order block, and then it shot back up. You could use your fib retracement, Confluence 101, fib retracement to get in, if you didn't catch it at the bottom, to get in at this zone. So now what we have is a solid harmonic pattern going. Based on, if you understand harmonics, you see a solid harmonic pattern going based on what you see here, 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 here. And even before this happened, our target would have been up there. So now this is a beautiful setup, right? So you could have gotten here. If you missed that entry, wait for the retracement back into the order block. If you missed that, wait to retracement back into the order block. And then it took off, right? So now what you have to understand, what it's going to do now is hunt the liquidity. So now, boom, liquidity right there. There's orders for sales right there, or stop losses sitting right there, right? And it took out these orders, boom, took out these orders, boom, took out these stops, boom. And right at the very top, notice how it went right above the highest high. Hold on. Why is it not? It's not working. Hold on. It went right above the highest high, wicked into that, straight manipulated and wicked into that. See that wick? Straight manipulation, clean. Took out the stops. This is what a stop hunts. That's what people call stop hunts, or retail traders call stop hunts. But this is just, it is what, this is how the market moves. And then right when it did that, it took it out. So now it's coming back down to pair with the orders below. So now this entire move is also, and this is all Confluence, shark harmonic. See how I literally put everything together. We have market structure, institutional order flow, harmonics. We have Fibonacci. We have everything put together to give us the nice confirmation. So if even before the harmonic really formed to be taken as this sell right here, you knowing that it's going back up, you could have taken this buy right there and caught both legs of the harmonic. Easy. So this is a nice setup. Nice, beautiful setup. And I just basically showed you how easy it is to trade with clarity. You don't need all the nonsense that everyone is trying to sell. You don't need all the, you just have to understand how the market flow. Once you understand how the market flow and the structure of the market and market cycles, everything is pretty much simple. So yeah, if you need any coaching, training, or anything of that nature, you can schedule a one-on-one with me. Contact me. Link is in the description. But if you want the course that I offer, that link is also in the description. But like I always say, always strive for clarity when it comes to trading. Keep your emotions out the door and strive for clarity. And like always, please subscribe, and please, be safe out there with your trades, and happy trading. Let's get it, y'all. Big fish.